Search trade.
All right, September 2nd, weekly meeting. I just want to recap what OG was talking about on this trade last week that we called out. So, on last week's pair, it was a bearish order block, right? We expected price to push up and then sell down. If I go to this 4 hour, Wednesday, I'll just go to the daily. The daily is easier to see. So this is where the trade started Friday. This is Monday, right? The trade went up to their first imbalance right here. We took the trade. It sold down. The next day, the trade pushes past that area to a higher imbalance. So if you're not a hedger, you might have got out of the trade or whatever. But if you were a hedger, your hedge picked up and it carried you up to this second. Oh, Jesus. How do I hit back? To the second imbalance at the top. Now, when we went through the trade last week, we marked the imbalances, right? See that big imbalance? Then we had another imbalance. I don't even know where that second one was. Thursday, Friday. Okay, there was an imbalance. I guess it was here in this area. Let me put the there must have been one over because we got an entry. Okay, here it is right here. This imbalance here. So if y'all remember, you can there's two ways that you can take your trades, right? You can take it at the golden zone or you can take it at the 78. And we try to push the 78 on you because the 78 is the optimal entry. So if I take away that candle, what we should have done, and I know for a fact that we did because we would have fibbed this candle, right? And I don't like fibbing candles with all these wicks. So if you go down to the daily, we just basically fibbed the move from here to here. If you notice, we broke these swing lows, so we expected price to push back up into this imbalance in here. Now, this imbalance, the imbalance goes from here to here on the daily. So this is the imbalance that we marked up. Okay, everybody see that?
Yes.
Okay, so if you drop down to the 4 hour, you got more imbalance. If you drop down to the 15-minute, you'll have that last bit of imbalance. So if you did your analysis, you would have had it marked up, just like this or relatively close to this. So now what you have to do is you can say, hey, here's my zone, right? If I'm going to take a trade, if you're going to take a trade at the zone, this is what I oftentimes talk about. If you're going to take a trade at the 50, you got to cover the 78.
Mm-hmm.
You know what I'm saying? If you don't cover the 78, it's going to come back and haunt you. So a lot of times, I'll just tell you, at least use half of the 50. Generally speaking, from all my times of doing this, I think most of the times is going to at least be a 61.8, right? And if it's not a 61.8, I'm not taking the trade. But the reason why we buy this to sell it is really for this basic reason. So if this trade was set up and we had it set up to go down to the negative 27, and then this is the second TP. All right, the two red lines are the TPs. Is everybody following? Does everybody understand?
Yes.
Yeah.
Okay. So if we have the trade set up like this, then there shouldn't be any worries. Now, if you're trying to get the smallest stop loss, then you're going to be screwed. But if you set the trade and it goes and it pushes down, then see how it pushed back up to grab the orders at the 78? If you were in it for the first trade and it pushed down, oh, I got a better lot size. The trade pushes down. The next day it shoots up higher, right? And this is exactly what is referred to as inducement, right? A few weeks ago, we talked about inducement. When you have two zones, you have two areas that need to be taken care of. The same thing happened to EJ, or was that EJ or GJ, Alicia? GJ? So it's two areas next to each other. You always want to use the top area, but most people have FOMO, which is why I would suggest covering that 78, right? So if you look at this trade, you had a 67 pip stop loss. But if you did it right, the trade went their direction, right? And you could have had one take profit down here, or you can still be in the trade. The trade is going to push back up and it's going to push lower. But my point is, if you see the setup, right? If you're looking at the setup, you're going to at least, this thing went 230 pips. You're going to at least cover the 78, right? So if you had just covered the 78 off this basic setup, you'd have made 3.5%. But if you got cute and you cheaped out on your stop and you just wanted to cover that first area, then maybe you wanted a 20 pip stop loss because you wanted to make 10 or 11%, then you lost. And then the trade did exactly what you thought it was going to do. Instead of you taking this first trade, right? And if it pushed back up and went into your 78, I'm going to show you, because they gave you a 4-hour order block up there at the 78. So for all the FOMO characters, let me know if I'm losing y'all, you FOMO characters. So everybody who had FOMO, it came to the 78, it gave you a bearish order block. At that point, you have position number 1 here. You could have easily marked this up, dropped down to your 15-minute chart, and you could have got a replay. You could have got another position right here.
That shit was so fire, so fire. Like, everything he's explaining, that's exactly what I did.
Sorry, Todd, when it sold the first time, was that 100 pips as well?
Yeah.
Yeah.
So
The
you could have
first,
got the 100 pips, like the God's plan in the first sell.
Yep. I had to jump out of it because it started heading back in dramatic fashion. So I went ahead and jumped out, and I saw the imbalance up there, and I knew it was going to the 78, and I caught it right on the money.
so I marked my zone. I marked my 78. I'm gonna delete this fib.
Get it, Summer?
I
I
can
see
drop
Summer
down.
working.
When I drop down to the 15-minute, there's a little imbalance right here. There's more of an imbalance in this candle. So all I would do, you could have had you a second entry like so. Half of this block right here. Here's a 12 pip, 14 pip, a 14 pip stop loss. Are y'all following me? This is the part that everybody always get lost, or are y'all forget or something?
Nah, people are getting it. People are getting it. Your target is the lows, right? Any lows. You don't want to sell yourself short, but it's very clear where the liquidity is. It's at the low, all of the low.
Man, I can't even. This thing is screwing me up.
Oh, move the big one to the side, up to the left bit, to the left. Move the big one, yeah, to the left, to the left.
To the
Yeah.
left, to the left. Okay, Beyonce. Thank you.
You're welcome.
Oh, Beyonce here right now. Yes, in LA.
Well, I'm a survivor.
Ready to go out there talking
Okay.
trash to that beehive.
Yeah, don't be talking trash to my beehive, please.
15 pip stop loss. Okay, so you understand that from this golden zone, I want to cover half of the golden zone to above the 78, right? Just above the 78. That's going to give me about a little under 15 pips. My take profit can be the exact same thing, right? But if however you want to do it, my take profit would be the exact same. Some of y'all target these lows. That's what they teach you to do. You can target these lows. That's cool. That's 8% for this little trade, and then it's 3%. That's 11% together, right? So let us. Oh, this is a 1 hour thing. Come on, bruh. As you can see, it all works out like we know it would. And that's 11%. But if you would have just taken this down to the bottom, you see how it's 17%. Anyhow, y'all get it, right? Who doesn't get that? Who doesn't understand that? Bueller. Okay, so I'm gonna test the group now, because let me erase these drawings. Clean chart. But bunky naked. There's 33 people in here.
Hey, I remember back when it was 28.
Me too.
Soon it's gonna be 72.
Then 500.
Hey,
We just skipped 300. We skipped y'all's favorite movie. Hey, is Adrian on the call? Adrian. Adrian.
I am, but I'm driving.
Oh, you driving?
Yes,
Okay.
sir.
Who wants to
it's summer.
summer
What? I'm at work.
summer game?
Who wants to do it?
Hey, look, man, this is we can do it together, man. Y'all like
Okay. Yeah, go ahead.
listen, this is where the growth happens, man. Like you can't make this up. This is really how it works. So what I want to do is, since Selena was cool enough to okay, let's just go look for ourselves, Summer.
Okay.
I like it. Have y'all looked at EA? Has anybody looked at EA or GA? GB,
Yeah.
GBP, AUD. Let's look at that one, Summer. I need you to mentor me. I need you to mentor me and help break down this power for me.
I don't think that was the one I was looking at.
Well, that's cool. We're gonna look at this one together because
Okay.
I'm asking you for help. Because the reason why I'm asking you for help, is because I'm on the monthly, right? Because it's the end of the month. I'm on the monthly chart. And what I thought was, man, this is a de facto bullish order block, right? And even if it's not, this kind of it ran up a long way. But it has a strong wick on it, right?
Uh-huh.
In fact, maybe I don't want to do this one because the wick is too long. And I don't want that to be the pair that confuses people.
Yeah.
EA. Obviously, this is a FXM. This is not one of the charts that I use. This is way back in the day. But I like to leave this because this is where a brother came from.
Just
There's-
look like the future.
That's Ruby's times right there.
Yeah, it is.
Look at those lightsabers all over your chart.
Exactly. How can you make money with all those distractions?
It's lipstick. Lipstick.
Okay, this is a better one, I think. Let me. Okay. You know why I like this one or why I want to do this one?
Because of monthly order block?
Yeah, that too. Really, the monthly candle. How many pips do you think this monthly candle ran?
Yeah.
Wow.
Oh.
Now, this would be 1,000 times better had it not started pulling back, right?
Exactly.
But that's okay. Fine. Because it's still a monthly order block, right? And sometimes, guys, you got to learn how to fish. And everything can't be your low-hanging fruit. But whenever I try to give y'all a trade idea, I always pick the low-hanging fruit because I want you to understand what we're looking at. But I'm just going to give you an example. This is still low-hanging fruit. It's just not quite as low as the one we've been getting with the pretty order blocks. Okay, so y'all know why I marked this box right here?
Yeah. Raymond.
Who? Can you say it again? I didn't hear. I couldn't understand what you were saying.
Because of the order block, you're framing the trade.
That's perfect. Okay, it's the order block, right? This is the bearish candle that goes with this bullish candle. So I expect when this next candle comes up, we come back and tap into the order block before we go higher. Right? Does everybody understand it?
Yep.
Yes.
Okay. Now, because I'm me, I want to look at this on a higher time frame. So I really want to understand what it is we're trying to do. Okay, so here is a bearish order block that price is probably trying to go back and bounce off of. It's a zone that's not been tapped into. What? Okay, this is a zone that hasn't been tapped into. Now I want to go back to the 2-week. We still in this 2-week. We're bouncing off this 2-week order block. Maybe we'll get through it this time. Okay, so back to the chart at hand. So we're gonna go back to this monthly. All right, we put the fib on it. What do we want to do now?
There's only one person talking?
Well, yeah, the person is helping me break it down.
Oh, okay.
Okay, I'm telling you what I would do. I would mark out the golden zone,
Okay.
and I would also mark out the 78.
There's your zone. I like to use a line for the 78. It's just easier for me. There's my 78. Now I can get rid of my fib, right? And now I can look at this at lower time frame, right? I know that this is the zone that I want to see price come into. We got really close to it last week. I want to see price come into this zone, preferably the 78. Remember, if I'm taking a trade from the zone, I need to do half of the zone, cover the 78 for a bullish move if I'm thinking that it's going to be bullish, right? Everybody tracking?
Yes.
Hopefully y'all are marking up y'all's charts while we talk, because if you don't mark it up on your chart, it's not going to matter tomorrow when the market starts moving.
Oh.
So hopefully y'all are marking the same stuff up on your chart as we speak and flipping back and forth.
Can you pause a minute so I could catch up?
Yeah.
Sorry.
Well, if
I
you want
I didn't see where you put your fib at, your monthly fib at.
Okay, let me redo it. And if you already saw it, just mark your own charts up. So I'm fibbing last month's candle, this green candle.
Okay.
So I'm going to fib the direction of the move. So from wick to wick, this is the bottom of that green candle. This is the top wick of the green candle. Y'all tracking? Wick to wick. Once I have the fib placed on here, wick to wick, I mark up my golden zone and my 78. Does everybody understand?
Yep.
And everybody marking their own chart.
if for the people in the back who can't access their charts at the moment, they're driving, just try and take a screenshot.
And this is the repetition, right? This is what everybody's supposed to know already. And a lot of people say they know this and they're not doing it. And you can tell they're not doing it because when they come in and they make comments, they don't catch these entries that are very clear. The only reason you don't catch these clear entries is because you're not doing this part. This is some of the easiest stuff you can do, and we don't do it, right? And being accountable, right? We should be hearing a lot of hoorays, a lot of good reports, because people are catching these entries. And when we see you catch them, when we see where you caught it, we can tell you caught the right position. And then you're whooping and hollering because you're starting to add zeros. You're starting to compound your increments. All right. We want to see that. We can tell you're getting summer. I can tell, right? But now it's time to put it in words. All right.
And also, just as a rhetorical point or a rhetorical question, if you had caught that trade last week that we talked about, right? And granted, I didn't go into deep detail on how to add to the position or whatnot, but I have, countless videos on how to go from a 4-hour time frame to a 15-minute and get the second entry. You can't make it up, dude. Like, if you had did that and you made 22% on last week's trade, bruh, what challenge couldn't you have passed?
Right.
What payout couldn't you have gotten? And this is not isolated to 1 week, guys. Like, we can take every order block that Selena's published every week of the month. You're going to catch probably 85% of these moves. And the ones that you don't catch, maybe you take a loss. Maybe you just don't even get in the trade. Maybe it doesn't come to your key area and it just goes on without you.
85%.
85%, man. I mean, just stupid. It's stupid. So we're not using Kentucky windage. We're not guessing. This is it. This is the freaking secret sauce. In every freaking week. This is one day, one move. Now, I want y'all to think back to me trying to pull your coattails to trade monthly candles. You remember that, OG? I was like, hey, well, all you got to do is trade the monthly candle. Just trade it back.
Yeah. I didn't know.
Think about this.
I didn't.
This candle started hauling ass back to, I'm sorry for my French, but let's look and see when it started turning. What day is this? The 21st of August, it started hauling. Now, it crossed over on August 22nd. Now, once it broke this low, everybody in the group understands what a change of character is. There's one, there's two. So everybody should have been waiting for the pullback. You could have been in this trade. It's under your 4-hour. This is under your 4-hour candle, right? I mean, under your 4-hour moving averages, which for us dictates sell. And if you just say you didn't trust it, once it broke this low, everybody in this room trusted. Once this happened right here, everybody in the room should have been, oh, it's going to sell. And you could have got in for the sell. Maybe you didn't know where it was going, but you could have sold it to this low, to this low. Then it comes down and it breaks it. And it's the 29th. So if you looked at the monthly candle, you'd have been like, oh, man, that's just a wick. So now I got to look for the retracement, right? Here's an imbalance on a 15-minute. There's a higher imbalance. This is probably the imbalance that we're going to get, y'all. Y'all see this higher imbalance?
Oh, we eating now. We eating now.
This is the imbalance that we're probably going to get this week. But my point is, if you have an understanding of what time of the month it is, where we are on the chart, then you can have an idea, hey man, this short is happening because it needs to create the top wick of the candle. Now the 21st is probably a wee bit early in my opinion, but the fact that it broke the moving averages should put you on notice. Once it breaks this low, now you're saying, hey man, we're selling. We probably tapped into an order block over there. You know, if you go and you frame your market, you would know that we're sitting inside a 2-week order block. But we don't talk about framing. I have a video on the YouTube that lets you know about framing. Framing is just knowing where your order blocks are, right? And you know, you would know that you're sitting in an order block. But anyhow, I don't want to skip any steps. I want to go back, and in fact, I'm going to delete that because we didn't get to that yet. So what we talked about was the first thing to do at the monthly. We fibbed the candle, we marked our zone, and we marked our 78. Everybody tracking?
Yes.
Okay. I'm going to go straight to the weekly, right? Because we're going to do the same thing for this weekly candle. Let me remove my fib. I don't want to confuse anybody. So let's pay attention to this weekly candle. We got a down push. So what do I do now?
Mark your fib, top down for that week.
Perfect. Fib the weekly candle from the top wick to the bottom wick. From the top wick to the bottom. Mark my golden zone. Mark my 78.
Oh, somebody about to start eating. I'm telling you.
So I can delete this fib, right? Everybody tracking?
I would just leave the fib on and go down to the 4-hour.
Yeah.
Yeah.
I wouldn't take the fib off.
Okay.
'Cause you need to see
I'm
what's
not you. I'm just telling you how I'm doing it. Y'all tracking? I fibbed. I got what I needed to out of the fib. I have my markings, right?
It just adds more confidence. If there is like a order block or
Well, that's
that is
fine.
important. Order block
All
and
I'm telling you is we have the areas marked out. Now, if you notice, this area, this imbalance is nowhere near our marking, right? Which, anyway, it's a key. It's a major key as to what's going on here. Because I want you to think about what we said. Price needs to push back, right? Maybe hit our golden zone, maybe our 78, then push down, right? To our weekly golden zone or our monthly golden zone and our monthly 78. Is that correct?
Yes.
So we don't get lost in the overall move. This is a bullish order block, which means that we want to see price tap into the bullish order block, push north. Then as it pushes north, it can take care of that imbalance that it hasn't messed with up there at the top. Are y'all tracking?
Yes.
Yes. But I have a question, Todd.
You see why, hold that thought. You see why this is bullish, right? So when you see the imbalances up there, there's no reason for me to want to even try to catch a sell right there. The best thing to do is try to catch a buy because you got those imbalances up there and it's already giving you bullish momentum. That's the type of momentum that's already telling you it's going up to the upper level imbalance. So you want this to come down first. What if it don't come down first? Well, then it's going to the imbalance still. Or is it going to hesitate up at the top here? You need this to come down. If it's healthy, then you're going to see it pull down.
Mm-hmm.
And if it's healthy, it'll just keep going and go straight to the upper level imbalances up there, straight to it. This is in transition right now. It's not showing any signs of sideways action. This can go straight to the imbalance next week. Oh, no, I'm sorry, it's a monthly chart, but you know what I'm saying. It's going up there.
Right.
So we're selling ourselves short to think that it's a sell right here.
That's not buy. So I had a question.
All right, go ahead.
Todd, for the weekly, when you fib the weekly candle, can you go to the weekly, please?
Yep. 667.
could you not also have fib both those weekly candles for, yeah,
Nope,
fib it
nope,
and then
nope.
because
nope.
it broke the structure, I mean, it broke the low
It
to
broke
then.
this, but I don't want to confuse people. So
Mhm.
One by one.
this is a 1 week candle, fib that one candle. Now, if the 2 week was over, which is not, we got 6 days left, then you can fib the
Mhm.
whole move. But don't do it if the candle's not finished. Just
Okay.
stick with the candle that's finished.
Okay.
That's an excellent point. Excellent, 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 excellent. You can't fib it until it's in place.
Yeah, that's how you get ruined, ran through, liquefied, all that. Yeah. So this is important. This is the move that we're trying to catch. Now, if you notice, if everything is everything, we're gonna get this move up, right? If it goes to the 61, that's 139 pips. But if it goes to the 78, that's 170 some pips. Then you want the sell move to come down, right? Then you want the sell move to come down. And from that 100 and some pips, anyway, I'm not gonna confuse you. I'm gonna go over here and put the ABCD marking on it. That way you can see it. Okay. All we're waiting on is something like this. Maybe it comes down to the 61. Maybe it comes down to the 78, which I think because it needs to tap in. And eventually, this is what we're looking for. Now, can everybody see this marking on their chart? This marking might help you. Just put it over to the side, so it's not in the way of your analysis. Y'all see where I got that from?
Yes.
Okay. Why do I put this on my chart? Or why am I suggesting you put it on your chart?
So you can see this. Sorry, go ahead.
And anticipate the move.
So you don't get lost during the week.
Yes.
You don't necessarily have to have it at the 78. You can have it in these 50% moves, right? You can have them in the zones. Now, here's the thing that I want y'all to start looking at too. We're using these high time frames. So what I really want to see is I want to see price interacting with each other. So if I know that this candle right here, that was a huge imbalance. See this imbalance right here? That's huge. So we know that we anticipate this push down to close this imbalance. But at the same time, on this monthly chart, the top of this order block is that wick. So I want to see this price come all the way down. There's a strong case for it to at least get to this imbalance. More than likely the 78, but at least this imbalance.
That's the imbalance or the golden zone of the monthly?
Well, it's both. It's the golden zone because I marked it, right?
Right.
This is the monthly, or no, this is the golden zone for the monthly. This is the order block. This is the week. This is the monthly order block. See that candle? Let me do it so you can see it. See this doji candle?
Right.
And then you get the bullish candle, bullish engulfing candle. This entire area is the OB. The golden zone for the monthly is right here. And then the 78 for the monthly is right here.
Okay.
So let me show it again so nobody is confused. Then I'll give you a minute to mark this on your chart. The fib move up, the golden zone for the monthly, the 78.6 for the monthly. So all I'm trying to do as an analyst is to say if there's healthy price action, then price is going to come down at least to this line, right? Because that's what needs to happen with this candle. It needs to touch the top of this line before it goes bullish.
Okay.
Now we know that the 78 is just below that. So me as a smart trader, you know, somebody who's trying to go places in this industry, if I catch me a sell here, I'm with confidence, I can pretty much say I'm going to get 350 out of this move.
Okay.
Even with the back and forth, right? With confidence, I can say that I'm going to get 350. And this is why I can see a 350 pip move when some of y'all can only see a 100 pip move. Because you understand what needs to happen, right?
Right.
So
Can
now,
can we make that the box as coloring or indicating the block? Can we make it a different color, like green or something?
hey, yeah, on your chart, make it orange. Make it green.
I'm just saying for people who's looking, so when you're transitioning from different timelines, they can see, they could follow.
Most definitely.
Okay.
You can also label it monthly.
Yeah.
You know,
I'll always label mine.
I've been there. I've done this. I've changed the colors. I don't do it now, right? Because I understand. But on your charts, and this is the importance of you marking this on your charts. I'm not doing this for me. I'm doing this for you in the group. So on your chart, change the color, label it, do whatever you need to do in order to make this happen, like in order to make this.
And you see why we have to do it that way. We have to make people do this. It's not, so we don't know if you're going to do it or not, but we have to keep pushing it this way because people need to do it on they should be doing these things. Now we're holding the hand and all that good stuff, but ultimately that hand has to be removed. And
No, I'll put it back up.
Okay. Sorry.
people need to be applying these things in their daily tasks and routines. They're spending a lot of time on a chart and using very bad techniques. You know, doing this as your job. Keep saying that.
Yeah.
Because that's how you have to treat it. This is your baby. Like, you got to take care of that thing because it's the best thing ever. You got to treat it like that. So hopefully people are, you know, I hear the motivation. I hear the morale is very high, and it's going to get even higher because people are going to start seeing the success in this. And just enjoy it, man, because there's nothing better than this. So.
Okay. I had a question. That's why I took my screen down. Okay.
Compraría esto para venderlo.
Okay.
Oh, okay. So, all right. The question basically was, let me pull my screen back up.
I understand, Steve.
The question was, if we know it's going to go up and sell down, or we know this is a bullish order block, I would buy this up. She's asking basically, would I buy this up, sell it down, and buy it back up? And the question is, hell yeah. Or you know, that is the idea, right? The idea is since we see this move is bullish, you know, as long as there's enough runway, as long as there's a good pip count, right?
Mhm.
This is going to be 130 pips up, which is a great pip count. And then it's going to be 300 pips down, you know. If it just goes to the 62, it'll be 370 pips. That's amazing. That is, you know, and maybe we won't get this whole move in 1 week. But I mean, just think about that. That is 500 pips between those two. That's an amazing pip count. And it's enough to take a $100 account to a $10,000 account, because you don't worry about your drawdown once you're in the move. But my point is, we anticipate this, and you mark this on your chart like this if you're struggling with keeping up with the market, because you need to see it and you need to understand that when these moves are happening and you're down here on the 4-hour chart, you don't get lost in the sauce. You can always go over to where you have the market moves over here. You say, okay, well, I thought it was coming up to these areas. That's the benefit of having this on your chart. If you need it, use it. You use whatever you need. Don't worry about if I'm using it or not. If you need it, you use it. Is everybody tracking?
Yes.
Okay, so let's get back to it. So we know that we expect price to push up into our golden zone, hopefully to our 78, because our 78 gives us the confidence to invite the whole family to the sell, right?
Mhm.
But if it just pushes up to our zone, we just want to maybe take ourselves, maybe one other person. But if it pushes up to this 78, we ask everybody in the family to come get on the bus. And we take that bus all the way down here to the deep south. Now, remember, this box right here represents the candles touching on the monthly.
Okay, right.
And there's a 78. So I want y'all to think in your head, and you don't even have to use a great imagination because we can see it right here. When price comes and touches these areas, you normally get a wick. So maybe it's going to come down here and wick and just get you close to the 78,
Mhm.
right? But we don't know because we need to drop down in our time frames and we need to see what's down there. And this is why Leandra said keep your fib on the chart. And if that's the way you do it, that's cool. If you notice, you got an accumulation or reaccumulation right here. So maybe we go and deal with some imbalance in this wick. Maybe we just come around this area. Maybe we just close this little imbalance right here. Y'all see the imbalance?
Mhm.
That's a possibility. Price comes down, closes out this imbalance, then heads back up. Now let's talk about what to expect tomorrow. So I want y'all to look at the chart. We got the break of this swing low. We got a little bit of retracement. We didn't go back up into the imbalance. Remember, this imbalance will be left to deal with on the way up. Then we get the push down, right? We break this other swing low down here. Now we push back up. If you drop down time frames, it's going to be an imbalance in here. But you push back up into that imbalance and you take the sell, right? Now we broke this swing low. We already know we need to push back up into the golden zone and possibly the 78. So let's drop down to the 15-minute, right? All right, here's our 15-minute. There's a slight imbalance. I mean, it's kind of been mitigated right here. It hasn't been closed all the way. But I'm going to look further. Okay, so let's talk about what happened down here. We got a low, a lower high, a lower low, a lower high, a higher low, what? A higher low. So if I fib this move, if I fib this move to that wick, and I pull back to the 78 and it goes higher, that feeds into the narrative that we need to go up to these areas before we sell down. Is everybody tracking?
Yes.
Yes.
Okay, so I really want to find out what's in these areas. So I don't really see clearly on the 15-minute. So I'm going to keep dropping down until it starts to make sense. So in my zone, I see some imbalance here. Y'all see it? There's a couple of order blocks. Oh, wow, look at that. Would you look at that? Oh, sweet baby Jesus. Huge imbalance. Huge imbalance. Order block. And probably, if I keep dropping down, how far you want me to drop, Leandra?
Can I speak now? I've got my hand up. I've had my hand up.
Yeah, go ahead. Go ahead.
I was speaking, I'm going to say about the monthly candle.
Okay.
Well,
Can you give me a minute to go back to the
No.
month? You want me to pull it back up?
Well, yeah, because I was going to say that, you know, that every monthly candle and weekly candle and daily candle pulls back. So there's always going to be a wick.
Yeah, every candle. Let me go
So
back.
especially on a monthly as well, expect a pullback. So we should have been expecting a pullback on this. And then you said on the thing, it's the 4 hour, like, oh, it's price sold at on the 21st. It sold on the 21st because it needed to pull back earlier in the week because the UK had a bank holiday. So bankers wouldn't been trading on like the Friday the 25th or the Monday the 28th.
And this is why
So that's why, pardon? That's why there's a lot of consolidation, and that's why it dropped on that pullback on the 21st before yours, because you said, oh, it shouldn't have dropped on the 21st. It should have, because it was a bank holiday.
Yeah, and what I said, I don't want to say it shouldn't have. I said it's a little bit early for me. I'm used to seeing this drop that next week.
Yeah,
which is cool.
Because the bank holiday at the end of the month, it dropped early.
Well, it would have been great if you would have freaking told us that y'all had a holiday and it was going to drop early.
Well, I did say something on, I think, the Tuesday.
Tell you after the fact,
but I was away, so in London. So
hey Leandra, where's your mom?
She's not in the room. She's not here.
Well, leave a note for your mother and ask her if she will start informing us if there's bank holidays at the end of the month, because you forget.
I was going to go to the bank as well, but it was closed because they've got a museum there about slavery and the money and stuff like that. It's crazy. But anyway, yeah, if you know, like Labor Day is this, that's what I'm talking about now, because Labor Day is this Monday. If you didn't know, silence. So obviously
Labor Day is here though, Leandra.
Huh? Is it today?
Is it in UK too?
No, we had bank holiday. We don't have Labor Day. That's an American thing.
Yeah, well, we know that there's a bank holiday in the States. We didn't know there was a bank holiday in Europe, like in London.
So don't you look at Forex Factory?
No, we look for Leandra. That's what we.
I mean, we got. Why I need Forex Factory when I got Marv and Leandra and come on, bloke. When you blokes over there, you know.
Oh my gosh.
But yeah, you know, hopefully, I mean, you know, all these are moving parts, and my point is this, you know, the greater point is,
but Canada's got a bank holiday as well this Monday, so I'm just saying, don't expect heavy movement on this Monday coming. Expect a consolidation, and expect more movement on the Tuesday, and you know, from the following week, from Tuesday onwards.
Which is cool. But if you just use the structure, it doesn't matter what day it moves, right? As traders, hopefully everybody understands that piece.
Yeah,
So,
but what I was saying, sorry, what I was saying about the monthly is that you said it pulled back early, yes, but there was a bank holiday, so that's why I was that consolidation, and then it dropped again, and then it did a pullback at the start of the month.
yeah, appreciate it. That
So you know,
pullback.
because if you see this long red candle, I think that's Thursday.
This one right here.
Huh? No. That's Tuesday.
This one.
No, the one at the end, yeah.
Oh, this is Friday.
Yeah, then the other one is got Thursday. I think Thursday is next to it. Yeah, it dropped on Wednesday, Thursday. So you can, and then if you go back to the monthly, if you mark that up at the end of the monthly, and then you can always look to see how the month end, and then you could like anticipate, because it ended on a Thursday. So price would have had to do something, either pull back, because if there could have been heavy news.
Right. Yeah. So if you know, and hopefully everybody knows by now, you can always fib the candle at the end of the month. And you know, some people haven't been in this group for long periods of time, but for those of you who have, we anticipate these moves happening at the end of every month. We anticipate a monthly candle. We anticipate a 6-month candle, a 2-month candle, all that stuff. We anticipate these moves. So that is part of the reason why we fib this one first, to see where price needed to pull back to. And then once it gets there, we expect it to go up. Now, what if it gets here and keeps selling? Well, that can happen. And if that happens, we're in the sale already.
Hello?
Right?
Yeah, we hear you.
Can y'all hear me? Y'all hear me now?
Hola? Yeah.
Can you hear me now?
We hear you now.
Okay. So what I'm saying is, what happens if it gets here and it keeps selling? Well, that means your 350 pip sale turns into a 400 pip sale, and you just keep holding it. Right? Now, I think we can all expect a reaction from an order block, right? Like, we've all been trading long enough to know that we're not just getting a long candle that goes through this order block. It's going to react. So at that point, we have to look at the structure on those lower time frames to make sure the structure is giving us bullish structure. Because maybe it goes further down, which is cool too. You know, maybe it goes past our 78 and then turns around. So what I'm saying is, we have a bias based off the candle structure, the candle and the market structure that we're given. So what we have now is, it needs to go up and it needs to come down. And that's about a 500 pip move between those two things happening. Everybody tracking? Has everybody marked their chart to look like this?
Yes, we have. Thanks for slowing down.
Yeah.
I did.
Colors not included, you know. I mean, however y'all want to color it, label it, you know, those are seriously, sometimes the colors do give people problems. So I know that from looking at Elfie's charts. So all you do is mark your chart to where they make sense for you. And that way you can have an understanding. And
I was saying to mark it and change the colors for the recording, for when someone comes back later and you're switching through different time frames, they could follow him, like, okay, when he was on the monthly, this is what this color meant and this is what he was marking up.
Oh, hell no.
You gotta
trying to help.
You gotta pay for that. You gotta pay.
Shut up. Stop.
Y'all have, hey, yeah, they can't have my colors all jacked up. You know what I'm saying? I'll be looking at it like, what the hell is that?
Okay.
Let me see. Let me see if I can tell you.
Isha, he knew blue was the official imbalance color.
Exactly. Thank you.
He does that. He does that.
What's the order block? What's the order block color?
My order block color is green or red, depending on which order block it is.
Mine is doo-doo brown. All right, doodle brown.
Oh my God.
Oh my
Bye.
Come on now, it should be green.
Hey, look, there y'all go with y'all's unnecessary request. But hey, if you hit
Men
my
are colorblind
cash app,
Thank you,
anyway.
ladies.
if you hit my cash app, I can turn it green for you.
I'll hit you with your cash out. Will a penny do?
Hey, look, so for real, here's the monthly, right?
Mhm.
If you put this post thing on your chart, it might help you, if you have the propensity to get lost during the week. So if you need it, put it on there. If you don't, you don't have to. But if this is the first time you're seeing this exercise, then maybe you need to put this on your chart so you don't get lost during the week. And when you start dropping down here and you start seeing where your price needs to go, it's not enough to say, hey, man, price needs to go here and here. No, you need to drop down to whatever time frame you need to get to, so you can clearly see the landmarks in those areas. So in my golden zone, I'm looking for imbalance. There's a little imbalance here. There's a little imbalance. Well, that's not really imbalance. There's big imbalance here.
Mhm.
And that's below my 78. There's a little imbalance above the 78. So the further you drop down in your time frame, ICT goes to the 1 minute. Sometimes he trades on the second charts. But when you get down to these levels, I can see a whole order block at my 78 that could possibly get tapped. I can see all the imbalance in here. So now if price runs through my zone, I'm not panicked, because I went and marked, hey man, here's an order block and an imbalance. And whatever color, y'all want to have colors on your charts to look like rainbows, whatever, y'all can mark these areas up. Order block with an imbalance, 2 minute. 2 minute order block, whatever. If y'all are doing all that, the more experience you get, the less likely you're going to be doing this type of stuff. But do what you have to do so you can see these spots. And now you'll appreciate why I'm telling you that it's just too easy to throw you a short tool on here, get you a 66 pip stop loss, and cover all that stuff. Because here's this is the golden nugget right here. Once you get into the trade, it's going to give you another entry. Right? Once you get into this trade, once price comes, just like it did in that GN trade, right? Once price comes into this area, it's going to give you a bearish order block. Then you drop down to that bearish order block and you mark that candle up. You fib that candle, and it's going to give you your entry. Then you take that entry, it's going to give you a smaller stop loss. This initial trade with a 60-some pip stop loss is a 5.23% trade. It's going to happen, folks. This trade is going to happen. Now, it might take more than a week, right? That trade might take more than a week, but here's a trade that's not going to take more than a week. It's the long.
I was just about to say, you buying it to sell it, or you're just going to sell?
I'm buying it.
Okay.
I'm buying it to sell it.
And then buying it again.
Yep. So now,
so the trend trade is an actual long-term buy because there's a bullish order block. Yeah,
right.
pinball.
But that's why you have that stuff marked on your chart over there. The directional bias.
Yeah.
So
So
this
that
is
should be the
probably,
grade.
what's that?
No, that the buy should be the grade A setup if price doesn't break that bullish order block. But the price action looks good on the monthly, so it should be okay.
I agree. And this is your grade A setup for the sale this week. Maybe Tuesday, maybe Wednesday, right? We kind of all know the days. Tuesday or Wednesday, we'll price will be up here turning around, giving us our down money. And maybe it'll be Tuesday because Monday's a holiday here. I don't know. But we know by now, Tuesday or Wednesday, price is going to be up here ready to pay us out. Now, this initial move, right? It's going to come down here, maybe in that first hour, maybe it shoots up and breaks these highs. Maybe it breaks this high and it pulls back to give you your entry. At that point, you can get on the 5-minute chart, right? Or 10-minute chart, whatever. And you can get you a smaller stop loss because you're going to see what the structure looks like down here. And you're going to be able to see what needs to be mitigated. Let's look at it on the 5-minute just so we can look down here. Nothing. Nothing.
Sorry, what are we looking for?
Something that needs to be mitigated, imbalances.
Oh, I haven't seen any. I only saw an order block. That's it.
Yeah, maybe just runs into an order block. But once this
What about the wicks, Todd? As far as the wicks is looking at, and I know Leandra mentioned this a couple of times from ICT, the consequent encroachment, and looking at that as imbalances also, the long wicks.
I agree. I agree with that.
Okay.
But there are several landmarks over here,
Yeah.
This order block here, this order block here, this overall. I mean, several that you could target, but my point is you're going to see, we fibbed this up earlier. Let me just redo it. And here's our 78. I always want to cover the 78. But once this bangs up and breaks this high, it's going to pull back again. That's where you want to get in the trade. You don't have to guess. I mean, and really, it's not so much a guess if you cover the 78, right? Like if you get in this trade where it is right now, you're still going to have a pretty decent 7.69, right? You're getting a 7% trade off of 186 pips. But if you catch that bang up and pull back and you use the 5-minute chart, you're going to have a second entry that's a lot higher than that. Y'all understand that?
Yes.
Okay.
That's what $10 is made.
Somebody asked, how did I calculate the 63 pip stop loss? Hassan.
Yeah, yes, sir.
Okay. You're asking how do I calculate this stop loss?
Yes.
Okay. So if you notice on that weekly candle, we just go back to the weekly. When I fibbed this weekly, you tracking? I fibbed the weekly?
Yeah.
Okay. So after I fibbed this weekly, here's my golden zone. Here's my 78. All I'm doing is I'm taking this golden zone and I'm cutting it in half, right? I'm cutting the golden zone in half. I'm gonna use half of the golden zone to enter my trade, and I'm going to protect to the 78, just above the 78. That gives me a 67 pip stop loss. Now, admittedly, this is the lazy man way to do it. You can jump down there with precision, and you can wait until you see chalk on that 2-minute chart, on that 5-minute chart. But this is a lazy person's way to get an entry, and I don't have to watch it. You understand what I'm saying?
I do.
9 times out of 10, when this trade pushes up, it's going to push up at least 50% of the golden zone. Now, I haven't seen a lot of trades that didn't give me at least the 61. That's why I said I'm cool with just using 60% or half of the golden zone. You as a trader may not be comfortable doing it this way, but I'm telling you what works for me. So if it goes up here and it gives me a 50% and it pulls back, then hey, I missed that trade opportunity. That's cool. It eventually it'll pull back and let me in the trade. But 9 times out of 10, it's going to pull back and give you at least the midway part of this zone. That last week's trade that OG was talking about, if you notice, it came up, it went to our first area, it sold. It induced everybody to start selling. The next candle, it pushed up higher to the higher part, to the 78, and then sold from there. So if you have your entry like this, you're protected from that bull crap. Does that make sense?
Yeah, it does.
So many people will try to tell you, oh man, that stop loss is too big, you can't make no money. And then I say, well, this trade with that big stop loss says you're making 5%. Most people trade 1 to 3 with those tiny stop losses, right?
Yeah.
So this is still a 5% trade. So what I'm saying is, if you do it the way that I'm suggesting you do it here, there's a higher probability that you're going to win that trade.
Yeah, so for last week, I was in that trade too. But for some reason, I moved my stop loss after a few days, and it went back to sweep me
Well, and
out.
listen, it took you longer than a few days. You moved it that day.
No, I didn't move it that day. I moved it like this second day, I guess.
Well, you had to, because I'm gonna show you. Yes, that the next day you had to move it.
Yeah, that happened within hours.
Because it happened that next daily candle. The next daily candle, it went up. If you look at what happened last week, and you go to the daily chart, it shows you this is the day that we got in. The next day it goes up, right? And it takes out that high. So if you moved your stop loss, and I want y'all to understand something, and all the time that we've been trading this, you don't have to move the stop loss.
Now I know.
This was a 78 and it falls. So the same with this GBP NZD trade, we won't have to move nothing. When we get in this trade, it's going to go exactly. It's going to go exactly where we say it's going to go. It's going to go down. And even if this is a triple top or a head and shoulders, however you want to look at it, right? It's going to drop. And we know that price needs to get to this red area, and that's still 350 pips away. So you can get a second entry without moving your stop loss. Just wait for the 4-hour order block. Wait for that 4-hour order block that happens, in between the zones here. You'll be good to go.
Yeah, thanks.
No problem.
And it's great to know that people are paying attention, and you're getting in there, your feet wet, and you have people around you who know what they're talking about. So now you get to streamline your learning curve. It's good to see people are putting stuff into play and not just sitting on the sidelines.
Okay, so
Mhm.
you said what? You
No,
got
I
a
was, I was gonna say, why don't you show him the gang box of how you get the 50% of
have you
that?
ever, have you ever used a GAN box?
Because some people might not know how you find the 50%. Like
You can use
you do it by
a fib or a GAN box, but I'll show you the GAN box. So once you mark your zone up, the same place that your fib is in, you go down for the GAN box, GANN box. I lay the GAN box over my zone here, and I can just shoot a ray across at the 50. Then adjust my entry. It's a wrap. Everybody see that? Easy money, baby. Okay. So did everybody finish marking this chart up? Who didn't finish? Okay, so everybody should have their buy position, and then they should have their sell position. So you can set alerts now. Now that you have it all marked up, you can set alerts that will go off and let you know when the trade is. Now, it's important to understand when you're trading GBP NZD, this move might happen while you're asleep. So you're buying it up. You can have a sell limit trade already in place with your entry here, your stop loss here. And while you're asleep, it's going to put you in the trade. You might wake up, trade might be right here. Maybe you wake up, the trade is up here, but you're going to be in the trade. Just trust your parameters. You got a bearish order block right here. Everybody see that? Y'all don't see it. Let me help you. Let me help your vision. You see that now? Now you see the daily order block?
Yeah.
And that's win or lose. The first thing you do with an order block is say, okay, it needs to be tapped into. And you need it to tap all the way into it, right? So that's how you build. You need the order block. Is it a daily order block? Is it a 4-hour order block? Whatever order block it is, it has to be in place. So every day we get another daily order block. Once that daily order block's in place, is it bullish? Is it bearish? Okay, it's bullish. Well, what's left? What needs to be collected? You should already, that's the first thing you should be thinking. Where is the collection point? You can't go wrong when you start there. Because if it goes all the way to that collection point, you look at the big bullish candle and you look behind that candle and you see a candle's wick behind the bullish candle, you need it to come down to that wick. And you keep doing that, you're profitable. That's just automatic. Because if that's the only type of trade you take, you're going to win more than you lose. And the higher the time frame, the stronger the signal.
The bigger the cap, the bigger the pillar.
Right.
All right, that's a nasty GN trade. Okay, so I'm gonna stop sharing my screen, and one of y'all can share y'all screen, and you can get somebody else in the group to help you break it down. Hey guys, this is only gonna do wonders for your trading. Selena said she would do it, but she's on another vacation. Another one.
Oh yeah, I see him. I see him out there. I know who it is. I know who it is.
Bruh, who gonna come on, y'all? Everybody should be like, I got it.
The name starts with an E.
I would do mine, but I'm driving.
Oh my.
Name starts with an E.
Okay. Hold on. Who's Tanisha? You said you gonna do it? I'll do it with you if you want to do it.
I would, but I'm just driving.
Okay.
Walk through. I can walk through it.
Okay, let's see. Which one we gonna pick?
One of them is on the list.
Yeah, I'm looking at the list right now. All right. We got AU, CAD Swiss,
Oh,
eSwiss.
hell no. We ain't doing no Swiss. No,
So NU then? All
Y'all
right,
can
you
do
gonna
it,
do NU, TT?
Yeah, it's fine.
All right, NU. How this happened is sharing. I'll look for my little sharing thing, y'all. Hold on. Fine. All right. Let's see what it is. All right, T, can you see?
Yeah.
Okay. Well, that's what NU is doing, so we can continue going on with NU. And then I have this on here. So just fibbed it for the down move.
Nobody's gonna say anything about her ugly fib.
What's wrong with ugly fib? I mean, this is a really small little order block, but I'm still gonna fib it. Leave me
From the north side?
my fib. I'm doing this one. I can't do this small one right here, but I was
How do we talk then, dude? Really?
You want to change and do something else? We could do U30.
No, she wasn't talking to you, Misha.
Oh, okay. All right, so here we go. Fibbing this one.
Yeah, Leandra's gonna do U30 after this.
Pardon?
I thought Leandra was doing U30.
Yes, I will.
Okay, so this is the biggest candle. And we could also, which one? All right, so here's our 78. Always mark it.
Did you put it on the candle?
Yes, it's on the candle.
Okay. Well, you got to use the line. That's cool.
Yeah. Oh yeah, for the 78, I use the line.
Leave this girl's markups alone.
I was just asking so I understand.
Okay. So for the golden zone for the monthly, here we go. I always mark them and write them because when I come back, I'm like, what was I thinking? So I mark them. And I put an M to establish what it was. And let me take this off. And then I lock them. So whenever I'm moving around, I don't lose my markings. Okay.
I do. That was a game changer when I found that out. I was like, oh my gosh.
I didn't find it out. But
Oh, sorry. We're now telling you, you can lock your charts, or you can lock your charts, but you can lock your like markings, like your boxes and lines and stuff, so they don't move.
Well, stick a sock in it, Joffy. The boy is in love.
Oh, let me see.
Too much.
And I'm also looking at the whole move. Maybe that's too much, but also let's look at what it's doing for overall and see
No,
where
that's
it's
not.
go.
That's
So
not too much. That's not
what
too
is it
much.
doing?
So, yeah, thank you.
So what does it do overall?
And right now it's looking like it's selling. So it has sold, it's selling, retraced up, came back here to this order block and started selling down. So that's
Throw a fib on the move.
On the whole move. I'm sorry.
Hey, you gonna tell us about it? I want to
Oh.
see. I don't necessarily believe what you're saying. I just want to see it for myself.
All right. Let's start from here.
No.
From here.
Further down.
Where it sell.
Yeah.
So yeah. So down came up to the 61 and selling down again, but let me close it in more. Yep.
So let me ask you.
We could start all even back.
Wait, no, wait. You
all right, let me put it back. Sorry.
Hit the back button.
Back button.
I got a question. I got questions.
All right.
21 questions. That's not where we were, but it's all
That's
good.
not. No, I'm gonna move it.
See.
I'm gonna move it. We were down here. Yep.
Okay.
I think that's the one.
All right. Now, hold up. Oh, wait. Okay. So where did the move start from?
It started from all the way up here.
Wait, no. Don't move, please. This is
okay, right here. Okay.
Because the same thing that happened to you last week is happening to you now.
Okay.
And I don't mean you personally, but us as a group. So let's look at the drop from that point. You see the drop?
Yes.
Can you put your cursor over it so the people in the back can see the drop?
From here?
Well, the original drop from the high that you have it, show the drop. That drop right there. Is there imbalance in that drop?
Yes.
Can we mark it, please?
Okay.
Has that imbalance been toyed with in any shape, form, or fashion?
No.
No. That doesn't bother you?
Mm-hmm.
Because
yes,
the price comes back and it went to the inducement area below that zone, the order block below that zone, and it started selling to trick you into thinking that it's selling. It's a trick. It's not selling.
Can we go back to the 4 hour?
Wait, no. I want to keep it here, and I want you to. Why do I say it's not selling?
Because price needs to come back and mitigate that liquidity.
Yeah, and that's not my rule. That's your boy ICT says that. But you can look at the chart and see that on that up move, it gave you a chalk on the monthly, right? Didn't it chalk it on the up move?
Here.
Didn't it break?
Yeah, because it came back to get the liquidity on the low. It hasn't taken the high liquidity on the high.
It took the high. It took out that order block right there.
No, it took out this the green candle liquidity.
Sweet Jesus. Look to the left. Can you put your cursor on the left? Now go to the left, right? Go to the left. That order block right there. The high of that order block. Show me where that high is.
Right here.
Did we break the wick of that high?
Yes.
Is that chalk?
Yes.
Yes.
And what does that mean? We're gonna pull back to where?
To buy. So all right.
Don't move that. Don't move that. Leave that there.
Do another one. All right. So here we go. So it has landed. So doing this change of character, it has landed on the 61.
Okay. So at the 78, where's your 78?
The 78 is down here.
Okay. So at any point now, we should expect an up move to take out that liquidity. Is that right?
Here. Yes.
Yes.
Well, the imbalance right there, that imbalance that needs to be mitigated. Yeah.
Mhm.
This is exactly what happened to us in that EN trade. It's the exact same thing, except for it's buying instead of selling.
Okay.
Remember
But
that?
the other thing, if you look at it from the buy side point of view, you got that big green candle. It's just coming back to fill the imbalance in that before it goes.
That's how I look at it.
Exactly.
Right.
That's what I was just saying, but God was saying no.
Huh?
Well,
That's what I was just saying, but I was like, no, it's Jack.
I think he's
No,
maybe
listen.
misunderstood.
Yeah,
But
well, I think what I'm trying to point out is if you fib it and you have the 62 and the 78, this imbalance for all intents and purposes is closed on the monthly chart. But when you drop down, it's still going to be imbalanced, probably down there close to the 78.
Okay, let's put that line on there then.
What I
the
was
other
gonna
thing
ask,
I would toss. Go ahead, Lynn.
oh sorry, I was gonna ask Isha to go to a higher time frame to the 2 month and the 3 months to see
The 2 month is not closed yet.
oh the 3 month then. No, I think the 2 month has, because on US 30 it did, I'm sure, because we've had
The 2 month is not closed
July,
yet.
July, August.
You got another month.
Yeah, so the 2 month has closed, no? What thing is this? JP1.
Yeah, hit 2M.
But when I looked on the higher time frame and
just type 2M
and zoomed out, that looks like a low.
How many days is left in this candle?
That wick is a low.
1 month and 30 days.
It's the second. So what do you mean? Where should be done with the 2 month candle? Let me see.
So this the new candles is 1 month, 30 days. So you've made a higher low. I mean, all it did was tap into the order block.
Yeah.
But then it's tapped into the order block. What 1, 2, 3?
It's selling down.
Yeah, it still needs to tap into the 78 to get optimal trade entry.
Yeah, on the lower time frame, you will see the 78. But even this move on this 2 month where you broke that low right there, where you broke the swing low.
Yeah.
The imbalance is in the same spot on the 2 month chart.
What imbalance are you talking about? You talking about this one right here?
Yeah, you can't see it from the monthly, but that's where your monthly imbalance is. That long candle on the 2 month chart was not even touched.
If Isha, can you zoom out on the chart, please?
I sure can.
Overall, I'm sure this. I was looking at GDP USD. It doesn't look like there's much to go further down to break that low.
I mean, it's a higher low.
I'm gonna take
That's so clear that it's a higher low. That's a buy. Yeah, you want it to go low, great, but understand you're looking at a clear buy right there. When the low is established, whenever the low is established, right? Look throughout the structure whenever the low is established, and you get this same little curl around like a 61.8, right? That low that's right there looks like a standalone. It doesn't look
this one or this one?
Yeah. That low right there looks like a standalone low.
Yeah, that's a COVID low.
Yeah.
So can we go back to the 4 hour?
We can.
Does everybody remember where we were?
Sorry.
Do y'all remember where we were?
Wow, that's nice.
Anyone? Bueller? Did I lose anybody?
Yeah, I missed the question.
Okay, I mean, we was trying to break down the why why I say this was a buy, because we got the chalk on the monthly, right?
I agree with you.
Okay, so
Right,
on the
let's-
4 hour, we wanted to see that what was there around that 78. So when you drop to the 4 hour, we want to see if there's an order block. It looks like there's an order block. There's imbalance around the 78. And where's the 78?
You talking about the one to the top or this one?
Well, that one at the bottom, because that's where price could eventually push to. So I want to go over there and see. We won't see it in this picture. You got to scroll over to the other side until we can see. Okay, what is that? An order block? It's like a reverse head and shoulders. You got both order blocks and imbalance, which is cool. We don't have to pay attention to it right now, but I think that price will push down to that area eventually. But for now, let's analyze what we got. So we know price needs to go to your zone, right?
Yes.
Before it sells down to the area that I
That's
was.
still on the monthly though. But yeah.
Well, but it needs to go up to your zone. And
yes.
On the 4 hour, I can clearly see chalk on this as well, right?
Yes.
Okay, so
Sorry, you need to go to the weekly.
Oh no, I'm following Todd.
Okay.
Whatever his explanation.
we're gonna go to the weekly, but I just want to know if you see on the chart what I see on the chart.
I still see cells.
Okay.
I see the buy.
Squeeze this together.
I see that high being taken.
Okay. Now
I see it now.
you see how it went higher than your previous high? It's going to sell. It's going to pull back and let you in the trade to buy up to your golden zone, right?
Mm-hmm.
Okay, but we need to go back now to your monthly chart.
Okay.
Because we kind of got sidetracked. We got sidebar. Okay, so the main takeaway from this chart is there's an area of liquidity in that blue, right? The imbalance in the blue that needs to be taken out. We already got monthly chalk where we broke that first high, and it's pulling back to let us in the trade. Now, what we want to do here on this monthly, you already did it. You see where price needs to go for your zone, right?
Yes.
Okay, now go to the weekly.
All right. Okay. We're on the weekly.
What's going on with the weekly?
All right, price already started making its way back up, bullish order block to making its way to this monthly golden zone.
Okay.
So I'm going to go ahead.
No, go ahead.
Yeah. So it's making his way back up to his golden zone. So I could fib this. So here's my 78 on the week. And then here's my golden zone. All right, where are these?
That stuff be labeled to the T, y'all.
All right, I'm gonna add these in here. Where is it? Bye. So Wow. Let me get this color.
What does that say?
0 for the week. So I'm looking at landing points of where price when it extends to the 0, the 27, and the 618.
Okay. The 27 in the negative 618 is your golden zone.
Mm-hmm.
You've been watching Jay Take Profits?
No, why? Is this what he do?
So, I mean,
why?
Something similar to that. You know, it's always funny though, because
how we always come up to the same thing.
Yeah, I mean, all you're doing is, you know, we got it because of we measured the monthly. You know, we know why it's going, but I guess, you know, it's all confluence.
Yeah, and that's why I do it. Is confluence is I measure out the week. So for the week, you know, whatever is done the last week, and I extend it out and I land out, and I'm assuming that it wants to finish out the move of the last week. So that's why I have these points here. So that's why I do it. And then also I actually got that from, because y'all don't use it, but I got that from UNT. Y'all told me the 27. I'm like, So that's what got me to start marking my charts like this.
Yeah, that's a J Take Profits thing.
Really?
Yeah, that's
wow.
where I got it from.
Awesome.
But
wow. Okay.
So I don't want to lose track of the overall move. So you could put your what do you call it on there? Your position tools. So if you're gonna take the buy, let's say you were gonna take a buy, I would drop down to the 4 hour.
Okay.
And you've pretty much done the work, but you can see an order block at that 4 hour where you would probably want to see price tap into that area for your price. So I will put my position tool, my buy position tool down there.
From here.
Well, at the top, like probably in the middle, right in the middle of your 78 and 61, whatever.
This one. Okay.
Yep. Now, knowing my luck, price ain't going to come down any further. They just make a bullish order block from there and keep pushing.
Okay. So here, that's 93, 127, and
I think we can assume this going to the 61. I think that would be a safe assumption. Yeah.
To here.
Well, that's the 78. The top of that is. Now, if it goes to the 78, it will be a great bonus. But that's about what, 1 to 5. That's 4.9. So yeah, it's about a 5% trade if we get that entry.
Yeah. So after price consolidated out of here and you do the high, if you see that it actually matches up down here to where that's the 78 for an entry into that bullish order block.
Right. And you know, that's all that move is that weekly candle. That's that weekly bullish order block that you fed.
Yeah.
Yeah. I mean, I wasn't going to say it while we was doing it, you know, but
yeah,
I knew that was the weekly bullish order block, but
but I thought we was doing this for everyone to see and to see how everything kind of like parallels to itself.
That's exactly what we're doing.
Okay. All right.
Okay. So the overall move is what?
How many pips?
No.
Oh, the overall move, you mean where we're going for direction?
Yes.
Okay, bullish.
I disagree.
Right now is bullish.
So I think it's a sell. That's your first move is going to be a buy, but you're buying it to sell, right?
Right.
You understand that?
Oh, yeah. Yes.
Okay, so we're buying it to sell it. So that
Mhm.
means the dollar is going to sell and then buy.
Mhm.
That means the indices should buy to sell.
Correct.
So I would put another position tool, and this is where you can use your GAN box
Mhm.
in that
Okay.
golden zone to do half of your golden zone.
Where's my game? Mhm. So this area here.
Okay, see that? Okay, that's the 50.
Yes.
Okay, you can delete the GAN box. And now you just place your sell tool to enter the trade at that 50 and then cover the 78. I would cover it. I would put it just past the 78. You don't want to get wicked out of this trade, the sell trade that's going to go down.
Okay. Okay.
Fire.
They're looking for it to come down here. Wait a minute.
Well, we looking, remember that area that we talked about?
You talking about the imbalance?
You go. So just go to the 78. You got the 78 marked up already down there. Keep going all the way down, way down.
All the way down?
Yeah. You got
okay, I know what you're talking about. This one.
Yeah.
Yes.
How many pips? How many pips is that?
329 pips? Nope. Yeah.
Yeah, 318.
There you have it, folks.
That's it. That's all.
Do you agree with the analysis, Ish?
Oh, yeah, I do.
He's doing a BRB.
Huh? I do. I'm happy we got to the sell part.
Is everybody confused? So nobody's confused. So everybody's able to take advantage of these easy, low-hanging fruit moves.
Ask questions. Nothing is a dumb question. I'm gonna tell you, when I first started, oh my goodness, I was like, so the base currency was okay. And I didn't care what anyone thought about me because I was like, I'm here to learn. And I don't care who thinks I'm silly, stupid, or slow, whatever the questions, and mostly that's going to be a reflection on who you are if that's how you think. You understand what I'm saying? So please don't think that anyone's judging you because you don't know or you don't know certain things. I know we were having a conversation. I spoke with a couple of people about, even breaking this down to different levels. But the only reason I got to where my level of understanding, because when I came to this group, everybody was running, so I had to catch up. So ask questions. So don't feel intimidated because, everyone here is sprinting or running and you over here, shoot, sprint to catch up then. So sorry, all love.
I have a question, if you can hear me.
Yes, we hear you.
Where it says the BP 78.6M, how did you get that line there?
Oh, okay. So that's when we were on the monthly. So on the monthly, we're looking and we're talking about the overall move of where market wants to go, right? So we're not just staying into our little block of where we're at. So that BP means big picture. So we fib that. So let me get that fib line. Because eventually this is the imbalance where we're looking to come back to. So let's, I think here. Did I do that right? Nope, we're looking for the buy. Sorry, I think we're looking at the buy. Yeah, the buy up. There we go. Is it here? Or was this the original buy? I think this was the buy we were looking at. Now, how did 78 wasn't? So sometimes I gotta bring myself back. Okay, there we go. So is that correct? Everybody remembers we're doing this? Was that the buy we were looking at or what we were fibbing?
No, go to the last, sorry, the last down move.
Last move? The last down move?
Fib,
78.6.
not that one, not that one, the one after that one. The down move after that.
The down move after that, this one? It can't be here, because this 78.6, is it going up?
So bring the top of it down.
The top of it down here.
Bring it down.
Here.
Right there.
Yeah.
That was the fib for the up move, right?
Down move. We were fibbing it down.
Right. So that was the first fib we did. The next fib we did was from that same bottom. You're using the wrong, you're using the September 11th. I mean the COVID bottom, not that bottom. You need to use the most recent one, that one.
Okay, there we go. Sorry. Okay.
And now you can delete the top one.
Okay. Thank you, Todd.
It's all good.
So is the green candles going up that we're fibbing?
Yes. Do you know why?
That's the retracement.
So let's talk about why. So when those green candles went up, they broke the high of that first bearish order block. Can you highlight that order block?
This one.
The one up right above that.
Sorry.
Yeah, that the top of that wick right there. Go to the top of that wick. See how that the move up broke that high?
Yes.
Once you break that high, that's considered a change of character.
I'll delete. See. Sorry, babe.
Once price breaks that high, it's telling you that, hey, price is going to go higher. All it has to do is pull back. After it breaks that high, it's going to pull back. This is where you want to catch your 78% pullback, in between the 61 and the 78, and getting that trade for the buy.
Okay.
You have to understand where it's buying to. It's buying to fill that imbalance. You see the imbalance she has marked in blue?
Yes.
So what happened was on that original down move and price pulled back up, you see that those green candles that pulled back up, it started selling too fast. But it started selling fast like that to induce sellers to get into the market. And maybe not sellers like me and you, but sellers who have big money.
Okay.
Those sellers get into the market acts like it's going to sell. Now it's going to turn around and go take their money.
Mm-hmm.
It's going to go higher than that point.
Okay. Thank you.
No problem.
That's when becoming a technical analyst and reading the charts, people that have a lot of money may not do what we're doing, right? If they knew how to do what we're doing, they would do it because they know that they have total control. Maybe they don't know they have control like this. I don't know. But the fact that you're able to do what we're doing here, like, it's just top shelf. You have total control over everything you do here, and you can just constantly pull money out of the market.
Yeah, if you perfect this, man, the sky is the limit.
Yep.
Any other questions? So everybody got it. Are you kidding me? Okay, if everybody got it, man, I mean, it is what it is. If you need help when the market starts, get somebody up. Hopefully you've marked your charts up. That's the important piece. If you haven't marked your own charts, then this is going to be very difficult for you to repeat.
Mm-hmm.
It all starts with
because even I was doing it and I got lost.
Yeah, it all starts with the markings on your personal chart. The markings on my chart ain't gonna help you tomorrow. All right, appreciate it, East.
No problem.
Hey, Miss London, Leandra, were you gonna do the US 30 for us?
Yeah, I can do.
All right, let me unshare. Just so y'all know, I'm not marking up anything else for the week. I got GN, NZ, NU, and now US 30. Thank you.
Hey. We like a gourmet restaurant with these pears right now. Gotta love it.
Sorry, I pressed leave. I left instead. Where is it? Okay. Right, can you see my screen? Hello? Hello?
Yes.
Yes, we can see it.
All right, walked away.
Oh my gosh, where do I start? Let me start the monthly. Sorry, don't watch because I've already marked this up slightly. So for me, this is a buy to sell. Yeah, it's a buy to sell. Because price needs to come. Yeah, price is tapped into this 6-month bearish order block. So I'm predicting it. And it's tapped into this 2-month bearish order block as well. And it's rejected from it. So I'm predicting a buy up into this wick and then a sell. And then possibly a buy back up as well. So let's go back to this monthly candle. It's not really telling me much on this monthly candle except for these MAs, which show me that price wants to buy, but also price needs to touch the MAs for healthy price action. So, and then this, I don't see this as a bullish order block. I see this just as a buy up into this bearish order block, as we've got 2 back-to-back bearish order blocks. And then I think it's on the monthly, got a swing high. Let me check. I don't see a swing. Maybe it was on a different chart. This, oh yeah, it's on the daily. On the daily, we have the swing high. So price buys up into this bearish order block, and then it's falling. So I'm expecting price to at least touch these MAs here, which bring price to around into this bearish order block as well. These 2 candles overlapping as a bearish order block. So that brings me to the quarter level of 34,500. If we go into the 4 hour, let me put my charts back on so I can see what I'm doing. Yeah, I'm expecting price to come to here, to this bearish order block at least, to tap into this 4 hour bearish order block and fill this imbalance, this 4 hour imbalance. It's already taken a good high, but my overall analysis for this is for price to buy up into the 35,500 pullback. That's why I've got that. Do I have a big fib on here? I think, I've got a big fib on my other chart. Yeah, so my overall on this chart, I've got a big fib. And price needs to come, well, I'm expecting price to come back to the 78.6 of 35,400. But if price doesn't come back to 35,500, then I'm expecting price to react from 35,250 because it's done that before. So 35,250. Price came back to this area and then reacted and just sold off again. Like we were expecting it to come to 35,500. It did, but then the major sell-off was from 35 to 250. Any questions?
In fuego.
Thank you, senor. So yeah, I see this selling off. Possible sell to buy, but then overall sell. But we have got interest rates this month and CPI as well, so I was not expecting. So,
how many points is that selling down first, Leandra? 250?
before this short-term sell.
Yeah, the short-term sell.
Okay, 1 second. $343 pips, I thought. Well, let me go to this bullish or this bearish order block. Let me not go beyond. Let me just go to this 4 hour bearish order block. So that's 184 pips.
Then it's going to buy up.
Yeah,
100 pips.
I'm expecting it to go to, where's my quarter level? If it goes to 35,250, that's 650 pips, like basically. That's a 4 hour fair value gap, so I'm expecting it to go beyond that actually. Hold on. This blue area is a 4 hour bearish order block. So it's like 680 pips possibly. Sorry, I just got to do that too fast. But see, price reacted on Thursday to this quarter level at 3,500, sold off in dramatic fashion, pulled back, and then is selling off again.
Healthy. That's healthy.
So before I see it break through this area here and come down to the major quarter level of 34,400, and that's where a bearish order block is as well, this 4 hour bullish order block. I see price, I want price to come back to at least 35,250 area, because we have a 4 hour fair value gap up here and a 4-hour and 8-hour bearish order block. Because price is already taken out. There's no fair value gaps up here except for this one in this wick. If price does come up to this 35,500 area, it will probably wick up into that area. That's what I'm like seeing. I know, Todd, you said that you see this going bullish towards the end of the year. If we look at the dollar, the dollar is going bullish, so that means indices will sell.
Can you
Wow,
fib that up move?
which one? Because I've already fibbed this.
No, on the dollar, the one that broke the high. Squeeze it in. Squeeze the chart in.
One that broke the high.
You got to make it a lot smaller.
Let me delete some of this stuff. What am I?
So squeeze the chart in. Bring more of those candles so we can see it. That up move that broke that high right there. So bring the number down on the side. Your axis. We can't see the bottom of the move.
Oh, we're talking about this.
Yeah, that move up that broke that high that you have marked.
That broke this high.
Yes, that entire move. Fib that entire move. You got to fib it from the bottom.
Yeah, I know. Just give me a second. Give me a second. Hold on. From here.
No.
What? Am I fibbing it down or fibbing it up?
You're fibbing it up from the bottom. You have you see how you have the line at the bottom, the double bottom down there?
Go from your bottom red line.
Yeah.
Where?
Yeah. No,
down further, your lower red line.
This one.
That bottom right there. Yeah. From that
right.
to the top of the move.
That's the entire move up to the top.
Yeah. Where's your pull? Where's your 78? It hit the 78, right?
Yeah, it hit 78, yeah.
Okay. So
I really wanted to hit that one, but I did.
Now you expect the next thing that you need is for the price to start breaking highs, right? Who got their phone?
That's Rashawn's phone.
You're probably going to break through that 50% barrier to induce buyers, and you're probably going to circle back.
What? Sorry, what do you mean, Sean? Break the 50%? This
break the high. Yeah.
Yeah, I expect price to probably move past that 50% at some point in the near future,
and then it's going to pull back
to induce buyers,
right.
And then you're going to pull back probably to the 62. I mean, these are long range things that we have to wait to see to happen. It may not happen that way, but we know we already got to 78% pullback.
So it needs probably to break the high. You need to see it break the high at this point, because you know you got the 78. We know we got the 78 pullback. We took the liquidity out the bottom of the market by running those lows, right?
So so 1 second. So you're waiting for price to break this high here.
Yeah, that one and the next one.
And that 51, that one that's sitting at the 50.
You're waiting for price to break.
The one next to that one.
1 second, Chris. For price to break this high, right?
And the one next to it, the one higher than that.
This one where I've got my money, cash money.
Yes, both of those highs, they'll probably get ran at the same time.
Okay.
And then you're going to get a pullback, like he's saying, to the 61. That's when your indices are going to run hot.
That's
I will be at the end of the year.
What's that, sorry?
That would be at the end of the year.
Mm.
And then the dollar is going to run up to that area that we had marked up for forever, like the 108 level.
So we're expecting a break past this liquidity, these relatively equal highs that's been created, and then break these relatively equal highs, I will call them, all this liquidity above here. This order block's been taken out, so that's irrelevant, but I think it's probably order block in here. A break up here for a pullback to
the 61, wherever that is would be.
Whatever, if it creates a bullish order block, I'm suspecting, and then a pull up to take out this 3-month golden zone.
Yeah, the imbalance right there.
Yeah.
Yeah, at 108, right? That's at $1.08.
$1.09.
Okay.
Well, go higher, it's $1.10.
It starts at $1.08, right?
What the fair value gap?
Yeah,
gold.
yeah.
So it's there $1.07, and then it ends where the bearish order block is at $1.10.
Okay. So that's going to be lovely, and everybody's going to be feeling the heat at that point.
I have a question.
I'm sorry.
So with that imbalance, that 3-month, that's a golden zone, not an imbalance. Okay, never mind.
It is an imbalance. It is
probably both.
It is an imbalance as well.
Probably both.
But because I can see this imbalance on nearly every time frame, because it's on the weekly, it's basically not filled. I don't need to put
nothing there,
an imbalance, and I only look at the dollar on a weekly or daily. I don't really look at it as on a 15-minute time frame, because I just need to see the overall move on what the dollar is doing.
Okay.
I can't wait until we start pushing up and the industry start breaking down.
Yeah, so the reason I'm looking at the dollar is because it correlates to, is it correlates?
Inverse correlation to the index.
Yeah.
Inverse correlation to gold also.
Yeah, inverse correlation, that's correct. That's what I was trying to get at. The inverse correlation to indices. But if probably US 30 is not the best one to look at, because it kind of has a mind of its own sometimes. But if you look at the S&P 500, well, look at that. Look, that is perfect. That's a 2-hour.
But that's a 2-hour.
Well, that's even more perfect on the weekly. It's coming into this weekly bearish order block. Because if the dollar is buying, this is selling, and that's what we'll be looking for sells, unless something goes on and the indices start buying. Which kind of rarely happens. It happened this year where the dollar was buying and the indices were buying at the same time. But it's more or less an inverted correlation. And I think, oh gosh, NAS has the same or similar setup to S&P. Yeah. How beautiful is that? So you can catch these sells when I see a fair value gap here. This is why I've put this bullish position up here, because I see that price needs to come to this area to take out this liquidity. One way or another, it will come there. And then for an overall sell.
I mean, that sell position is so awesome. If it were to do that, if it were to run all that liquidity, that's like the best opportunity that you can ever get at this point in your trading career. If you can get a sell at that high level, man.
Well, the reason why I'm saying it could take this liquidity, AJ, is because it could just wick up there.
Yeah.
It could just wick there. Like when we're saying, you know, price needs to pinball, it needs to go down and then go up and then go down and then go up. Price could just wick. It might be, you know, a news wick, and it just wicks you into the trade, or, you know, it wicks to your level, or, you know, it's like OG said with that can't remember, said, is it GEN trade that is trading? He said it moves so fast.
Yeah.
That's why Todd's saying that have your limits set and your, you know, your stop losses at a reasonable pippage is like what you call it, so you don't get, you know, caught out, you know, 100 pips. That's a good way to sleep nicely at night, you know?
When you think about the time that we have right now, there's not a lot of time left on this move. It's a pivot point, right? So once it's out of there, it's out of there for a while. So this is giving you a sell opportunity that's going to take you into 3 to 6 months, basically in profit. And then it's going to go to its next pivot point, which is going to be a buy position for most cases. It's a sell right now. So you want to take this sell and all these profits down so that you can put that on the buy position at its lowest point.
Yeah. Look at this monthly. That is definitely buying up and taking out this high.
Yeah.
To go into this this monthly candle right here.
Yeah.
And look at all this liquidity that is left.
Yeah.
To be taken out. Yeah, that'd be nice.
The beauty of it all is that once it's in transition, now we already know we're looking for sells. Once the sell is solidified, then you're looking for sells all the way back down to where's the liquidity at the bottom, all the way to the bottom. That's the beauty of what we do. We know this. It's like having a cheat code.
I only do quarter levels on gold and order blocks, but sometimes if I can't understand it, I'm not really going to trade it. I don't know if anyone wants to go. Where's Sean? Look at these triple tops. I don't know if do you think gold's going to buy? I just want it to run through these triple tops. But I don't know.
Well, that's the big picture. You know that. That's what's going to happen. But with the narrative the way it is, it's
so if for what I know about interest rates, if interest rates then and the dollar gets higher.
I think we don't run them triple stack highs probably until, I mean, I think we're probably still another 6, 8, 9 months out from that. I think that'll happen when we get our next bull run, you know, because we're gonna have a falling dollar for sure at that point. We're probably gonna have, I would guess, you know, lowering of interest rates. So that would be my guess of when that happens.
Okay, so
basically after the dollar hits that imbalance at 108, that's what we think.
Yeah, but I think when it hits that imbalance at 108, at some point the dollar starts, you know, really, you know, selling off. You know,
right. After it takes care of the imbalance.
Right. So, and I don't know the timing of everything. I just kind of loosely base it off about the crypto cycles. So, and that's why I kind of, you know, I know Bitcoin halves in April of 2024. So I know, generally speaking, you know, about 6 months after that halving, things start going parabolic in the crypto world. So that parabola usually coincides with a falling dollar. So I would guess somewhere out there in probably about this time next year, 2024 into 2025. That's when, yeah.
Can you explain what a parabola is for the people in the back?
It's when asset prices basically look like, you know, they start going up like rockets, you know, moonshots. You know, you get them really strong, big ass green candles. If you pull up a line chart and, you know, of Bitcoin or ETH or Doge, you know, anything like that, if you pull up a line chart, you know, you can see it better because the line just goes vertical.
During the pandemic, right? Like that would be the best example.
Well, if by yeah, I guess so. Yeah. But you'll see it. It'll be obvious because, you know, the lines go straight up or the candles go straight up. Even that right there, I don't know what we're looking at, but
the dollar. Oh no,
there, you know, let's say what?
No, it's well, I'll go on to Bitcoin. What,
Yeah,
on a month?
so, yeah, like that.
So what were you saying that this is, was it parabolic?
Yeah. So basically when you see that, you know, that the dollar, you know, if you pulled up a dollar chart and put it beside it, it's probably going to be the exact opposite. Because like we were talking about you know, a few weeks back, we buy everything and exchange everything in dollars. So as we print more money, the dollars in our wallets and our bank accounts, they buy and purchase less. So that's why if you go to buy a real asset like gold, like a house, you know, any other kind of real estate, you name the real asset, it's not gonna stay the same price if you debase or cheapen the dollars. It's gonna cost you more dollars. So that's why you see the NASDAQ, really all the equity charts, even the S&P and the US 30. That's why you see the crypto charts in times when the dollar is falling or buys. Stop it, God. When it buys less, let me go back outside. When the dollar buys less, those asset prices, you know, they go straight up. Because what it's showing everybody and trying to tell everybody is your dollar is buying less. That's why, you know, instead of this stock costing you know, $10 a share, now it's $50 a share. That's why the Bitcoin goes from 3,000 to 20,000, from 20,000 to 60,000, and it's going to be 100,000, you know, and 500,000, you know, as we move into the future, because you keep debasing the currency.
And how do we debase the currency?
In short, we print money. You know, every time we bail out a bank, every time we send billions to Ukraine or whatever we're doing, you know, anytime you're pulling money out your ass to bail somebody out, to send aid to this country or that country, you're debasing the currency. When they printed all that money and gave everybody them stimulus checks, and all the dumbasses was out there buying crabs and shit, you know, instead of put it in, you know, instead of buying a real asset.
Are you trying to tell me you didn't go to Juicy Crab?
What?
You didn't go to Juicy, Hot and Juicy?
I make my stacks regardless. You know, I'm gonna be at Hot and Juicy whether I get a stimulus check or not. You know, I don't want to get off get off
track.
schedule here. Huh?
We're still recording.
And don't get off track. It was good what you're saying.
I mean, I hear you, Elfie, but you know, I don't subscribe to the bullshit. You know, quite frankly, I'm here to give it to you straight. You know, because I think when I give it to you straight, you know, you understand it and you don't forget it. You know, so
I do.
My larger point. My larger point here is when we print money, whether you agree with it or not, you debase the current money that's in circulation, that people make, that's sitting in people's accounts. So when you go to buy that house or that stock or that whatever you go to buy, it's going to cost more money. It's called inflation. So to slow that down, when I give everybody in the group $1 million, now everybody is flush with cash. They can go buy anything. So to slow all that down, the Fed says, shit, man, I got to raise these interest rates. So because it costs more to buy stuff when interest rates are high. And what they're talking about is stuff that you buy on credit, not necessarily if you're going to go drop down cash, then, you know, you don't care. But stuff that you buy on credit, you know, cars, if you use your credit card, you know, homes, you know, that kind of stuff. Or if you're taking out loans to, you know, start a business, you got to pay the loan back. But if the interest rate on your loan is 2%, it's all good. But maybe if it's 8 or 10 or 12%, you don't want to do that. So that's why they raise the rates, to slow down, to throw water on that fire, you know, from everybody spending. So I know we keep circling back to this every few weeks, but it seems like something happens or the talking points present themselves for whatever reason. So here we are. I mean, it is important. I don't mean to belabor the point, you know, but you know, once you understand kind of, you know, in the real world what it looks like, you will understand, you know, when you see that dollar falling, you need to be running to the gold chart. You need to be running to the Bitcoin chart, the ETH chart, you know, the index chart. And when you see those assets falling or rising, you need to be looking opposite, because there are some of these assets that should be moving, you know, they're the inverse of each other.
Yes, I agree. I just meant, you know, you're French on the record.
Yeah. I know, Elfie. I mean, it's all good. It's my brother's group, you know, so I mean, I don't care about the politics. I don't care if people say, oh, he cussed, you know. I'm not the only guy that cussed. So, you know, like I said, I think the true baseline, the meat of what I'm saying, you know, it shouldn't be lost because I used I think some of y'all will appreciate it, you know, once you kind of nail down in your own mind, however you interpret things, once you nail it down and you understand and you know where to run and where to look, probably appreciate it.
I do.
I absolutely
appreciate it. Some really good gems that you always teach us, Sean. Thank you.
Anytime, Lily, anytime.
You definitely see the correlation between the dollar and Bitcoin.
Sean,
correlation, sorry.
It's really good to keep hearing about the fundamentals with, you know, actual baby boomers, like actual people who lived through the things that maybe some of us haven't lived through.
Let me stop you right there. Let me stop you right there.
You don't know what you just done.
My mother and my father are baby boomers. I'm not a baby boomer.
He's a boomer.
I am Generation X. There is a difference. You know, everybody whose hair is gray is not a boomer. Yeah.
I love hearing you guys' perspective from Generation X and baby boomers. Like,
you're a boomer
because you guys have been through, like, because even me, like even in 2008, although I'm a millennial, but I didn't understand 2008's crash because I wasn't like in the world like that. Like I just was head down what I was doing, like in college wasting money. So
Right. But I'm gonna be honest though. In 08, I was a younger guy. I didn't understand it in the moment either.
Well,
but
and I was in Iraq, and I was part of that zero interest rate stuff. I was in like those motor companies when they fell through the bottom. So if I had known to just hold, it'd be different for me too. So that we don't always make the right decisions, but that's kind of why we talk about it, And here's another thing, TT, with the information we have in front of us, and I know y'all don't believe it yet, but you could take this same information and, like Sean was highlighting a week or two ago. If you look at the 6-month chart of the Dow, is it the Dow or the NASDAQ, Sean?
Probably both of them. But what point are you trying to make?
About the sale, about how it sold down and pulled back.
Oh, probably the US 30, if it's the one we were talking about, I don't know, a couple of days ago.
Yeah, so you see how you broke the swing low on the 6-month chart, and then price buys back up to the 78.
Yeah.
So if you these are long range charts, right? You don't have to be a trader per se. You just have to understand, hey man, once this gets to the 78 and gives me that sell, I can throw my little 0.01 in here and hold it. Maybe it drops 2,000. That's $2,000. Maybe it's over the 2 months, but your account rises $2,000, right? Just off happenstance because you got in the trade when it hit your 78.
Yeah.
Now, Leandra just showed you that she expects this to sell. How many points was that, Leandra?
Which one?
Well, US 30.
Basically 1,000. It's probably like 1,000.
So if you had gotten to this trade a week and a half ago, whenever it hit the 78, and you're holding on, and they're just telling you it's going to drop 1,000, jeez, man, like you don't have to be a trader. You can just get that one position to hold it and make $1,000. Maybe that's by the end of next month. That's $1,000. So you just keep repeating this process, right? And you're using the higher time frames.
Right.
It's just a matter of time before you done ran up a bag by just sitting here listening to information on a meeting.
So this is how, like, what Todd's saying is brilliant, because what I did, I've been looking at US 30 since I don't know how long, but then so I fibbed this capital. I've got a Wanda chart which I trade off, and then I also look at capital.com. Like sometimes I'll just leave markings on here on the higher time frame and look at it. So I fibbed the 6-month candle like Todd was talking about, and I just keep the fib on there because sometimes I like to. And then I was waiting.
I do the same thing, Leandra, because it's powerful.
Yeah.
But go ahead.
I was waiting for the price to come to the 78.6, which is 34,400, 420, 34,500 if you're looking at quarter levels. So if I go onto the Awanda chart now, and this is when I started talking to OG, and he started helping me really understand like quarter levels and the price coming to that level and everything like that. And I was like absolutely confounded because I already marked up this area and I already know price needs to buy into this 6-month order block. So when it came to this 35,500, if you look, I already had price, gap in price imbalance. Wait, sorry, I think it's here. I had this marked up. So this was a daily bearish order block. I think I deleted it. I think I had a, if you see on here, I've got monthly order block, daily bearish order block. Yeah, so this daily bearish order block was inside a monthly bearish order block. So I was waiting for price to tap into this order block. There was a imbalance in here as well. Well, sorry, no, let me speak again. There was a, what's this? It's a text. There was a 15-minute bearish OB. So I went down to the 15-minute because I'm a ICT girl as well. And this is what me and OG were literally waiting for. When he was sending all those messages in the chat, all those voice notes, this is what we was waiting for. So price bought up in on the Wednesday, but then you're thinking, and it reacted from it as well, it sold, but it wasn't the breaker structure sell. It wasn't the sell that was gonna really shake the indices, or as you can see, price kind of consolidated along this area. But this one was, so it bought up, hit the 50%, that's what Todd's saying, of, I think it was an imbalance there as well, because that's why I marked it up. Yeah, because this pink line's a 5-minute fair value gap. So I don't know if I can go down another 5 minutes, because I'm sure it would mess up the charts. But price sold off. What day is this? This is a Thursday. Sold off. And then it came back to this bearish order block, and then just literally catastrophically dropped. Now, if you got that trade, let me put this marking on. If you got that short from this, even this 50% or this pullback, I'm going to show you how much. Because price wasn't going to go any higher than that. It was just that it just wasn't. Say me and OG were looking at 35,750. So if I put this at 35,750, we're thinking, oh, price could go to 35,750, but I'll put it at 35. That's the closest I can get. So if we look at how price sold off, so it came to this came to 34,400. I know it came to here. So it took, go across on the 4 hour. Took Thursday. Sorry, that was the 27th of July to the 25th of August. But if you wanted to take it from here, let's put it up to this one. That's the 18th of August. Took from the 27th of July to the 18th of August, and that is over 1,360 pips. And I got caught up in my pippage, in my psychology just got so messed up when I was doing this because of this back and forth as well. But then OG was helping me out, and he was like, you know, price is going to come back to the 35,500, like get in, because I was really in a lot of drawdown on my accounts from previous trades that I was doing, which were just silly. So price did come back where you see this wick here, and this is where I marked it up again. And sorry, I've got so much stuff on this chart, but this was just such a trade that I was just like, wow. But I did get this in a demo. So, but I just didn't get it in my like funded accounts, which I was really annoyed about. So you can see I put a 0.02 and I put a 0.02 on my funded account. And so I got in 2 trades there. And then I also got in on my demo account. So price came back to 35,500, I think that was the news candle because it wicked up. And then it sold off again. So that was another entry, that possible entry that anyone could have got to get into this trade. And then price pulled back up and then gave you this 35 to 50 at the quarter level entry. Now, let me go down to it. And it's a 4 hour, 8 hour bearish order block because she was resting there. I'm sure there was a reason why I want to show you on the 15-minute, because these are like easy money trades. Price sold off, pulled back. There's your entry right there. So that was 10:15. It created this bearish order block. 10:30, drop off. What is that? That's an ICT 2022 mentorship, or if like you've been watching the new content, that is the ICT what is it? I can't remember what he calls it.
Silver bullet? Is that the
Bullet?
silver?
Yeah, silver bullet. Yeah, silver bullet. So that is silver bullet at its prime. That is spot on silver bullet. And if you scroll across, I think it tapped into another order block. Price tapped into this order block. So if I was watching US 30 on the day, because I know this is a news candle, I'll look for any bearish order blocks, any liquidity that I'm thinking, oh, price might react to, level that up, like mark that up, sorry, and then see what price is going to do. And then plus I've got these quarter levels in here as well. So 35,500 was our major quarter level that me and OG had marked up, which so it went over that quarter level, but price did react from it as well, which is very interesting. But then it sold off. So for the overall 6-month move, that's another entry. And my first entry is still live and kicking on a demo because my psychology was so messed up. And then if you go back to this one as well, this one I didn't catch. And I didn't even catch this pullback because during London, was it? No. Yeah, because it just ran. And I was like, I can't even get in for this sell because price is already running. And I don't like to get in when it's running. I would have to wait until New York for this pullback. And even then I didn't get in because I don't think I saw a bearish order block. And I was like, I'm not going to get in because I don't see my confluences to get in for this trade. But if you was ready and willing, 3 o'clock in the morning, even before London, this is during Asian, I wouldn't have expected this to sell off like it did. Price pulled back 78.6, but it filled this imbalance. I'll put it above this high here. I'll put it there, sorry. Put it above that imbalance, just in case price comes, because I was waiting for price to come back to this imbalance, to be fair, but it never did. It just kept on running. So there. These 3 entries for a 6-month trade. And we're expecting it to go all the way down to here, to the 500. So that's 2,000 pips. And then I'm waiting for this to go back into this fair value gap that didn't get mitigated by price, like when I was expecting it to, like I just said. price didn't come back and give me that that pullback, and plus it's at a time that I don't trade. So even during London, I missed all this drop. And then I was expecting price during New York to buy back into the fair value gap. It didn't do that, just sold off again. So I was like, okay, cool, like it's okay. It's still, that means price needs to come eventually and take out this 4-hour fair value gap. So that's why I'm expecting price to pull back to either 35,250 or 35,500 would be lovely for price to pull back to. But yeah, that's why I kind of just ran through this US30 trade, and I said it's going to sell, buy, and then sell again. That is my overall analysis for this, and this is why it's a sell, because on the 6 month it's reacted and created this wick on either side, and I'm expecting price to do the same, but hopefully end bearish and end in a bearish order block for the next 6 months or 3 months at least. Yeah, sorry it's so long-winded. It does take me a long time to analyze these charts. That's why I don't like recording it. I do in-depth analysis, sorry. Any questions?
That's okay, that works for me. Thank you.
Thank you, TT.
Yeah.
Thank you. I do the same thing. I have to stare at it.
Pardon?
So I do the same thing. It takes me a minute. I have to stare at it. Let spirit guides talk to me. No, I'm playing.
Yeah. But the optimal trade entries, like these ICT entries, really do happen, and they happen at the times that, you know, like perfect, especially what's it, silver bullet. But you can also get in before the silver bullet happens, which I sometimes tend to do, depending on if there's a confluence that I'm happy with and price is taken London's liquidity, and I know the direction that the trade is definitely going to go to. But if not, then I'll wait until news is finished, and then I'll wait for the US Open to do its opening things. Like this was Friday. I didn't trade it, but I knew that price needed to buy up, take out this fair value gap here, buy up, and then it was sold. I did take this on my demo, but I didn't take it on my platform account, because we go to the 4 hour. It's got this bearish order block here. Price needs to buy up into this bearish order block, at least, like Todd was saying, to the 50%. So if put a gang box on here. So that bought up over the 50%, nearly touching the wick, but not quite. But you know, it brought up enough. Sorry, let me just rephrase. On the daily, there was a bearish order block, so I knew price needed to buy up. And then if I went down to the 4 hour, I was expecting price to buy up into that daily bearish order block. I think it touched, yeah, this 1, 2, 3, these 3 candles are order blocks on the lower time frame. So price tapped into this daily bearish order block and then sold off. So this was news, which was NFP. And then I just waited until it was like 3 o'clock my time, because 3 o'clock it always creates an order block or something. So you've got a bullish order block, and then you've got this doji, which sold down into the bullish order block, bought back up, and then it created a bearish order block. So if we go on to the 5 minute, and if you look at the 5 minute, it's created this bearish order block. Price needs to buy up, expecting price to buy up into this bearish order block. It bought up, and then it sold down, created your bearish order block. But if you know that price needs to sell because it's created the daily bearish order block, you can just get in for the trade and like cover this area. But I just knew it was going to sell, so I just got in for the trade. And then you can get in again for your second entry when price pulls back. So that's your first entry. And then you can get in for your second entry. Like normally I'm really bad. I'm down on like a lower time frame. So if you don't get in for that one, you've got one here, and you can just put your stuff in there. And then if you're not happy with 2 entries, you can always go in for more. What time is that? That is 11 o'clock, going in for 12. I don't like to enter trades before 12 o'clock because I find that it goes a bit funny sometimes in the US30, especially on a Friday as well. But if you were going to enter a trade, before 12, then there's your three possible trades. That's I don't even know what ratio that is. It's that 11 to 8. I don't know what that is. Well, that's 200 pips with the 18 pips stop loss. And then you've got 185 pips with a 12 pip stop loss. And then 114 pips with a 14 pip stop loss. Yeah. But this is the silver bullet in this blue shaded area, because I always like shade it blue. So yeah, that is how you get a silver bullet. Any questions?
Very nice. Thank you.
Okay. Thanks, guys.
Appreciate it, Leandra. Hey, does anybody have any questions over anything we covered today? And it's okay if you do. But if y'all need help, you need to hit somebody up, tell them you need a one-on-one, because we're trying to hammer away at these same basic concepts that we've been covering for the last few weeks. It's super important that you understand these basic concepts, because that's what opens the door to more complex ideas. But if you understand that, hey, the trade is either buying or selling, it's going to go break a high or break a low, then you're going to get a chalk, then it's going to pull back to the imbalance that was created when it expanded either higher or lower. And that's how it's going to work. It's going to work like that from the higher time frames down to the lower time frame. And it's on us as the individual trader to understand where we are in that market. That's why today I kind of introduced that little tool that you can draw out how the market should move or what you expect to see from the market. Because sometimes we get lost in the back and forth of the market, and we forget the direction that we should be trading. And the last thing that I would want to say is, if it does not align with your analysis, if the market starts acting funky, then don't take the trade, because at the end of the day, you're going to be responsible money-wise for a bad trade or for a series of bad trades. It's easier to just start fresh the next week.
100%.
So if y'all have any questions or if y'all need help, please reach out, man. It's free. It's something that you're not paying for. But it's something that you will pay for in terms of buying accounts or replenishing your personal account.
But don't go asking for signals or people to do the work for you, as we've seen this week. People getting angry.
I'm gonna give you a signal. It's gonna be the way out. All right, fellas, ladies, if y'all had nothing else, we'll see y'all in the market streets.
Thank you.
Good ideas.
Take care, everyone.
Have a nice weekend, everyone.
Awesome job.
Thank you.